Okay, with this full guide, I will teach you how to actually invest in stocks and how to actually make some money. No bullshit guide. And I will teach you this because your fat and broke professors at that useless university that you are going to fail to do so. So let's go straight to the point. Okay, bro, so the first thing that you want to do is select and find your broker, okay? For example, I am using eToro. I will show you this, or otherwise, if you don't like them, you can also invest here with interactive brokers. They are also amazing. And otherwise, if you don't know any of them, or if you don't know them, if you don't have them in your country, then you can just write, for example, stock broker and then the country where you are from, let's say Switzerland, okay? And then you can see, okay, interactive broker, Saxo Bank, eToro, De Giro, XTB, and so on and so on. In my case, we will go with eToro, okay? So what you want to do is to open your website broker, I mean log in into your account, whatever. Here you can see that I am in my virtual portfolio because I don't want to expose my data online, so I am showing you the virtual one, but I can tell you that the profit and loss on my real account is much different, in better sense than here. And okay, you have it opened, you go here to discover and you leave the page like this, okay? And then what you want to do is to go to ticker terminal, because right now we need to find stocks that we will invest in, and this ticker terminal is the best research tool that I've seen so far, and I am constantly using it. Okay, when you make an account, you see this page, yeah, okay? We will just close all those advertisements and everything. Okay, and now what you want to do is you want to go here on the left to global screener, and here we will put data inside so that we can find superior companies. And with that I mean that we will find companies which have so-called moat. That means that they have competitive advantage over their competitors, yeah? And we will try to find those companies with the help of their financial data, okay? So here I prepared one Word document from what you need to put here inside, you know, that in those conditions, okay? So we will start doing that, and I will also put this link in the description so that you can have this document, you know, what you need to put in, and then here how everything looks like, and so on and so on, okay? So the first thing that we need to do is, you know, to put the country, okay? We will put country, and here in the country you want to put is one off, and then all the countries that you want to invest in. I recommend you that you invest in United States because they have United States stocks are one of the most researched ones. For them you have a lot of data, a lot of opinions, basically a lot of financial information, yeah? It's really amazing. And United States stocks are also here shown for free, because I will show you, if you put France, for example, and Germany, what I did as well, wait, Germany, or maybe Switzerland, you will see that free version of ticker terminal doesn't show you any data of the European stocks, yeah? Which is why you want to really start with American stocks and then build your European portfolio as well if you are interested in investing. Basically here the country, you have to choose it like this, that you go here on your broker to discover all the stocks, and then you want to go here to the stocks and see which countries are here available, okay? For example, New York Stock Exchange and Nasdaq are from America, Then London is United Kingdom, Sydney, Australia, Frankfurt, Germany, Hong Kong is Hong Kong, Paris is France, Milano is Italy, Madrid is Spain, Stockholm is Scotland, Zurich is Switzerland, then extended hours trading, what you can ignore that. Then you have Amsterdam is Netherlands, Oslo Norway, Copenhagen Denmark, Helsinki Finland, Brussels is Belgium, and then OTC markets you can ignore as well. Lisbon is Portugal, Saudi Arabia, okay, it's Saudi Arabia, and Chicago is America, okay? Okay, and then if you want you can put all of those countries here. But for me I am focused only on American, French, German and Swiss stocks, okay? Then we continue. We put sector is not one off, and then here you choose all the sectors that you are not familiar with or that you think that are quite shit, okay? For example, for me, I don't know anything about communication services. That means mobile providers, for example, Vodafone, T-Mobile and so on and so on. And I don't know anything about energy, okay? Because I am not engineer, I don't know anything about that. And energy is also, in my opinion, it varies, you know, like sometimes there is crisis, sometimes there is shortages and things like that. For me personally, what I'm the most familiar with are financials, because I also work in a bank, so it helps, and I am overall also interested in finances and stock market is investing, as you can see. Then we want to put another financial financial filter, which is called return on invested capital, sorry bro. Then here you want to put value and last 12 months and put greater than 15. So basically return on investment capital is how much, when company invests their money, how much are they getting back out of that investment. And you want to do this for at least 5 years, yeah? So we will do this again. And then when you do it for the then older years, you put here fiscal year, yeah? Because fiscal year is one year that they had, one business year, let's say, yeah? And you want to always put it more than 15 because that's an extraordinary return. For example, on stock market, you can usually hit a returns of 5 to 7%. 10 is already amazing, and 15 is even better. It's outstanding amount return, okay? And we want to find only companies that have that, more than 15, okay? And then next year, when it's going to be 2024, we will put here, instead of, we will keep that LTM, so last 12 months, but we will add an additional 2023, okay? So we will have then 6 years, which is even better. You know, the more data that you have, the more accurate your stock picking is going to be. Okay, then let's fill quickly all of that. I know that this is right now a bit boring, but you have to do the boring job as well if you want to have good returns. If you want, you can also skip this section really quickly, because right now I know that nothing interesting is going on for you, because I'm just filling the data and that is maybe a bit boring. But we have the last year anyway right now, so if you didn't skip it, then congratulations, you are better than 99% of people that were probably watching this and skipping it at the same time. Okay, next next filter that we will choose is total revenues. Okay, this is basically all the cash that company got during 1 year, and here we want to put compound annual growth rate. This means that how much it grew during those all years, and here you want to put 10 years at least. Okay, so from 2013 to 2022, and when it's going to be year 24, we will put until from 2013 to 2023. Okay, here we always want to have everything more than 0, obviously, because we don't want to have losses in any year possible between those 10 years. Okay, then we put last market cap. Here last market capitalization is more than $500 million, and then here we want to have market cap is basically just how much cash they have, you know. And then here we want to put another filter called trailing total enterprise value. So basically their whole value in comparison to EBIT, which means earnings before interest and tax. Basically all the earnings before you have to pay taxes. Okay, and total enterprise value, it's quite self-explanatory, you know, how much value they have. Yeah, we want to put less than 15 times. And then return on assets is the next one. We will put value last 12 months more than 10%. So basically they are getting 10% return on all the assets. Okay, which is, as I told you before, an amazing return, more than average. Okay, then total debt to total equity. Okay, so total debt means how much debt they have, which is obvious, and total equity is the value of all stocks. Yeah, how much. And then here we want to see what is the comparison between debt and equity. Okay, the lower it is, the better. And then here we want to put again compound annual growth rate and fiscal years for 10 years. Okay, from 2013 to 2022, and again next year when it's going to be 2024, we will put from 2013 to 2023, or from 2014 to 2023. Okay, but as I said, the more data you have, the better it is. Here we want to put less than 50%, sorry, because if they have less than 50%, that means that technically they can cover all the debt at any given point. Okay, and the last thing here, it's not mandatory, but I still want to keep it. It's last price. That basically means that we want to buy stocks that are cheap, and for me cheap is less than $150. And an additional thing that you want to do is to have dividend yield. For example, here period close dividend yield in percent, you want to put more than 5%, let's say. Okay, but that's not mandatory, so we will just ignore it. And then you want to click here, fetch screen. Okay, and now as you can see, I was already doing this, so I got some stocks here. And what we need to do is we need to sort it by this. So trailing TAV in comparison to EBIT last 12 months up. Okay, and what that means you just click here. You see, you click up and then you see 22 companies out of 67,518 that are great for investing based on those financials that we chose here. Okay, and I know that you might be right now a bit worried, yeah, because yo, those are just 22 companies, I want to have more and everything. But bro, no, as Peter Lynch said, you need only 6 to 7 investments, because the 8th one or the next one is going to fail. Okay, so keep your portfolio small, don't diversify that much as all people are saying, because that's just bullshit. Okay, because the more you diversify, the more stress you have, and the more you see companies as just money instead of as companies themselves. Because when you invest in companies, you are investing in business, you are investing in actual people that are right now here inside. You know what I mean? Okay, so right now we have here 22 stocks, and as you can see, some European stocks are locked. Yeah, they are this is from Switzerland and this is from France. And then here I want to show you a little trick what you can do, because I don't have paid version, I just have free version, because I don't want to waste that much money. So what you want to do is the following. Then you open Google or whatever search engine you are using, and you want to see all the stocks that are on Zurich Stock Exchange, because as you can see, country Switzerland has Zurich Stock Exchange. Okay, and then you want to go here and write Zurich Stock Exchange, and maybe also all stocks, list of equity. Okay, perfect. We go here. Okay, here we have all the stocks, I guess, but let's rather see here on the web page listing equities. Okay, you know, like stock market and investing in it is a lot of times just searching, because yeah, it's quite a lot of data. Yeah, okay, if you want to do this process even quicker, you can go here on your broker to Zurich Stock Exchange, and we will try to use that data here to see which stock that is. Okay, and if our broker even offers it, because brokers usually or sometimes don't offer all the stocks that you want to invest in or that are shown here in ticker terminal. Okay, here we can use the last close price. As you can see here, it's $15, and then what you want to do is to convert that to Swiss francs. Okay, so you have $15, it's 13 francs. Okay, and then here on the broker we want to take a look which stock could potentially be that. Okay, and we are looking for 13 francs. Just check here the buy price and see if eToro offers it. Okay, this one could be it. It's that Clariant AG, and we will just open it in new window and keep it. And then that's it. Okay, they just have 49 stocks, so not that much. And then here we have that stock, and we want to, first thing that you want to see for the stocks that are locked is their price to earning ratio. Here is minus 55, so I'm like already no go. That's already no go for me. But then you want to quickly see the graphs, you know, how are they going, and you can see that the stock is falling massively, so you can just say goodbye. The next one we have is from France, and it's 53 euros. Okay, then we will go to we will go back to Discover. We will go to stocks and we will pick France, which is Paris. Okay, remember it's $53. Wait, let's quickly see. $53, how much is that in euros? I would say that's around 50 euros. Let's choose euro. Okay, 49 euros. Okay, because here the prices are in local currency, yeah? So right now we are looking for local currency, 49 euros. Okay, maybe this one could be 49, 49, 40. Maybe this one. You know, I'm looking at the prices that are quite similar to each other. I know it's a lot of guessing, but that's the only solution if you want to keep the free version, you know. As you can see, Paris Stock Exchange has much more stocks. They have 125, which is also quite good opportunity. Okay. If you want to invest in European stocks as well. As you can see, they're extremely cheap. So I recommend you that you have at least 1 or 2 stocks that are good from Europe. Okay, right now we are still searching, you know, because as I told you, searching is massive part of stock market investing. Okay, that's it. We got 1, 2, 3, 4, 5 companies, and this one has the most similar price. Okay, so right now we want to check how they are performing. Okay, here price to earning ratio, you see it's 55. Basically you compare price to earning ratio of this company with the companies from the same industry. Okay, and then that's how you can see if the company is a bit overpriced or not, because here right now you can see that it's 55 ratio, and let's say that the average out of this industry, which is technology, is 30. Let's say that means that this stock is potentially overpriced. And me personally, I don't invest in stocks that have price to earning ratio more than 15. No matter how good they are, still nothing personal, it's just business. Okay, so here this one I will just close immediately. This one as well, because it has 23, 31, 10. Okay, so right now we have this stock and we want to quickly see the graph. Okay, so right now the price is somewhere in the middle, but what is most important is that we can see if it's growing. Okay, it's kind of growing slowly. It looks nice. We go quickly to stats, and then we can see they have 51,000 employees, which is amazing. That means that it's a quite big company. Gross margin, they have more than 50%, which is amazing. Net profit margin is kind of good, you know, it would be 20% would be perfect, but nonetheless around 15 is amazing. Return on investment 15% is great. 27% operating margin is amazing. Debt to equity only 15%, bro, that's amazing. I will put that on the watch list, definitely. This company, bro, the more I look at it, the more I think that it's this one here. That's impressive, bro. This is impressive company. Okay, let's see this one, -5, so fuck off. Okay, man, this company is amazing. Then here you can see all of the data and all of the comments, but the comments, bro, just ignore them because fuck those people. They just want your attention. And then the analysis, you can quickly see if you want to feel better what other people and other analysts are thinking about it, but usually I would just ignore it, you know. But right now, if you are new to stock market investing, this will make you feel better. This will make you feel more confident, because I know that for me it was the same. I was relying on the analysis of others, you know. Okay, analytics are quite good, so that's perfect. Okay, now we found this stock as well, and this one is not included in eToro, so this is the only Swiss stock as well, so I will just delete it from here because I don't care about it anymore. And we have now here our 21 stocks. Okay, and then what you want to do is to go through all of the stocks, all of their financial data. So you just click on it, and here you can see that it opened with that ticker. Ticker is the short name of the company, PRG, Fundamental Analysis. Okay, and then here you want to quickly see the 10-year graph. Okay, it's amazing. If you would invest in 10 years ago, you would have 3.6% return. Okay, and then what we want to do is to go here to financials, and we want to export this into Excel. Okay, if you have Excel, that's great. If you don't have it, I suggest that you pirate it, because we obviously don't want to spend money on paid things, you know, it's that simple. Okay, so right now we need to export this into Excel. How can I do that? We want to keep here, you want to keep for the 10 years. Okay, so from 2013 to 2023 on here on annual US dollars, and if you want you can have millions, it's okay. Okay, as you can see, I have 3 versions, so everything is locked, so we will have to see until 2018 that we have the data. Okay, and then shit, I need to upgrade it to copy the data, so that's something new. So what I will try to do is to copy everything like this. Oops. Copy and then paste it here. Okay, just paste it somewhere, but as I can see, this is a bit bad. Yeah, this is trash. Okay, so I guess we will have to do it manually. Okay, how I usually start it is here by putting the name. Name is Proc Holdings with the ticker. And here you can also obviously edit the data a bit. You want to keep it like this. Okay, perfect. Then here you want to rename this sheet into income statement, and then we want to copy, or we want to take a look at the following data. We want to take a look at total revenues, if they are growing. Perfect, they are growing quite well. Then we want to take a look at gross profit. Gross profit is also okay, relatively stable, not perfect, not growing, but also not bad. And here we have gross margins. Okay, we want to keep those margins above 40%, but right now you can see that they are falling a bit, you know, so that sucks a bit. And then operating income, let's take a look. It's growing, and okay, here it fell a bit for some reason that I don't know yet, because you have to take a look into the annual report for that. And then we have net income. Net income is here. Net income, okay, 2020 it was quite shit, and you can see that net income is not stable. Okay, so we want to ignore that company. We want to ignore that, delete here the name, and go back to global screener, because this company is a bit weird, you know. Operating income was a bit bad, and net income was a bit bad as well, and you don't want to risk it. Okay, and then you want to see the next ticker. So MBUU. Does eToro offer that ticker here? MBUU. No, it doesn't. So we have to skip that. At least I have to. If you are investing with how are they called, with interactive brokers, then maybe you have it. The next company we have is Medifast, which is ticker MED. We put that here, MED. Medifast, perfect, we have it here. Okay, perfectly. So let's quickly check the graph. Okay, the stock is falling for some reason that I don't know, but in the last few years they have strong financials. Let's see. If you would invest 10 years ago, you would have right now almost double investment. That's amazing. Dividend yield, also if you are a dividend investor, 8%, which is impressive. It's impressive. It's impressive. Wow. Let's see that for sure. Yeah. Wow. Okay. That's crazy. Okay. This company looks amazing. What you also need to take care is that the company is as old as possible. Okay, this one is from 1980, so it's quite good. It survived the 2008 crisis, it survived 2000 dot-com crisis, it survived Corona crisis, and probably a ton of crises in between that I am currently not aware of. But you know, there is always some shit going on. Okay, let's explore this company right now. So let's start in income statement. Let's start with total revenues. Okay, let's take a look. Total revenues are growing quite well during the years, so that's already a good sign. And here you can see I have to quickly change back to 2018 because we have those 2 years locked. Okay, the next thing is gross profit. Gross profit is growing, that's amazing. Then gross margins are also amazing, way over 40%. As I said, that is the perfect thing. So 40%, around how much? 70%, that's an amazing thing to see. Then we have operating income. Operating income is also growing, except here from 2021 to 2022 it fell down a bit, probably, or maybe because of the war. Then we have to take a look at operating margins, maybe as well. Here you can see that you can choose different things, yeah. But I suggest you that you have only one thing open at the same time. Operating margins are okay, falling a bit. It sucks to see that, to be honest. And then net income, it's growing, that's perfect. And the last thing that we need to see is income margin. Income margin, I think that we have to calculate it by our own, or maybe if we have it here, net income margin, yes. It's around 10%. In the last year it fell down a bit. That sucks a bit, because preferably you would want to have over 20%. And the last thing that we have to do is to calculate capital expenditure divided by net income. That I don't know if we have here during the ratios, I mean within the ratios, but I do that by my own in the Excel. So I suggest that we put all the data inside, because so far it looks really good, and then we calculate everything. Let's quickly also take a look at the balance sheet. Let's take a look at the things that we have to see here, which is long-term debt. Let's find long-term debt. Okay, they don't have any information, which sucks. Then we have retained earnings. Retained earnings are basically earnings that they don't pay the stockholders, but rather invest back into the business. And you can see it stays kinda the same during the years, you know, so that's not the best thing to see. But nonetheless, let's go on. Total equity, those are all the shares. They are growing quite good. And what else do we have? Return on equity. Return on equity, basically how much they have the return based on the stocks, you know. Okay, we will delete that. We have here return on equity. It's growing, which is perfect. That's what we want to see. And then in the cash flow statement, which is the third financial report that companies usually issue, we have to look at capital expenditure. Okay, let's find it. Capital expenditure, it's here. That means how much money they invest to basically improve the business, which means how much money they invest back to technology, how much money they invest for, I don't know, buying properties, new equipment, and so on and so on. And you can see they did quite a few investments here in 2021, which could explain why they had lower profits and less cash in 2022, because maybe they spent a lot of cash here. I mean, you can clearly see that they spend it, but maybe that's the connection between those 2 years. And you can see that in 2022 they also spent more than in the years before, so 20, 19 and 18. Yeah, okay, now let's copy paste all of this into the Excel, which I prepared here, and then we analyze further. Okay, so what you want to do is first take a look at the company's name and paste it here, and then put everything back to 11. I like to do that. You can do whatever you want. Okay, and quick disclaimer, this will take a lot of time, so if you want to skip a bit, you can do it, feel free to do it. But if your attention span is not that low, then you can stay with me here and we will do it together. Okay, okay, let's do it. So first we have total revenues. I will put here total revenues, but I want to add one more line, because here we will put 2013, 2014, and then up until 16, 17, 18, 19, 22, and then here last 12 months. Or let's just keep it until 2022, that's also fine. I will put here in bold. So we have total revenues, gross profit, we have percentage of gross profit, we have percentage gross margin, then we have operating income, income, we have net income, we have net income margin, and then we have capital expenditure based on net income. Okay, I will make this a bit bigger. Okay, now we have to copy this, copy paste here. We will delete that because that's what we don't need, and I like to have a bit of detail, you know, so I want to have everything the same size, and right now it is. Okay, now this is called balance sheet, and then here we have long-term debt, we have retained earnings, we have total equity, and we have return on equity. Okay, all other things we don't need, and then we copy paste that as well. Copy paste, yeah, I guess just copy paste here, it's all good. And then here I want to have the same size as this, so it's 213 pixel. Okay, and this is going to be cash flow statement. Cash flow statement. And here we only need one thing, which is capital expenditure. The other three things we don't need, so we can just delete them. Okay, now we have prepared our Excel, and what we need to do now is fill the data. Okay, so how you can do that is to go down. We are analyzing the company here. Okay, wait it load a bit. Okay, we have the data here, and then we just fill it, yeah? But what I would suggest to do is that you also use another website, which is called Macro Trends, I think. Macro Trends. Yes, it's called Macro Trends. And from Macro Trends, we will use the missing data from here, from Ticker Terminal, because as you can see, Ticker Terminal has only data until 2018, but on Macro Trends we will find data for all the years. Okay, and now we start filling. So total revenues are, let's compare first that we have the same data, so we will type total revenues for Met. Okay, Met. Okay, perfect. Revenue. Okay, let's see. Those are the charts. Let's see for and compare it. Okay, so 2018 it was 501. 2018 501 million. Okay, perfect. So here we have the data, and then we can just type it in. Okay, total revenue was 324, 285, 273, 275, 302, 501, 714, 935, 1526, and 1599. Perfect. Okay, gross profit is here. Let's compare it again. 2018 380, 380. Okay, perfect. So let's go. 2013 it was 241. I'm looking at the number here. Now 209, 219, 260, then 228, 380, 537, 698, 1128, 1140. Okay, now gross margin is the ratio between those two. Yeah, we will still take a look. Gross margin in 2018 should be 75.8%. okay, let's calculate this. If we divide gross profit by total revenues, we get 75.8. okay, perfect. We will change that into percent and add another number here. Perfect. And then you click here on that little plus on the corner and you drag this left and right, and it will show you the percentage. Perfect. Operating income was 69 in 2018. So let's go back here. Operating income was 69 2018. Perfect. Okay, 2013 it was 38, then 30, 29, 27, 40, 69, 91, 134, 216, 185. okay, net income, let's compare it, was 5579. let's go here, net income 5579. Okay, it's perfect here. So we will use 2 4 13 20 18 28 56 78 103 164 144. Okay, and net income margin is net income divided by total revenues. Okay, so we will use that divided by that, and here as well percentage and 1 decimal. Okay, let's see if that is correctly. 2018, yeah, it is around 11.1 and here is 11.2, so it's perfect. Okay, capital expenditure and net income, we have to calculate that when we will have here in cash flow statement everything that we need. Okay, long-term debt. Okay, let's find long-term debt. Maybe we will find it here, financials. We will go to balance sheet. By the way, here in financials, income statement, you can also find everything that we need. Okay, let's go balance sheet. And now long-term debt. You see it's here. So they don't seem to disclose it. Only here in millions. So it was 0.2 millions. And here everything was 0. Fortunately, we don't know that, but we can find that in annual reports. I think at least usually that's how you find it. Okay, retained earnings. Let's check retained earnings. Where are they? Where are they? Where are they? Where are they? You know, right now I will just check one number. Because if they are here the same, here they are, then they are the same in megatrends as well. Okay, so it's supposed to be 131 million in 2018. 131 million, perfect. Okay, then we put it to here. I'm looking at the years. Okay, here it was 98, here 89, 89, 93104. Then here it was 131, 169, 154, 190 and 140. Okay, total equity. Total equity here is just written here, but here in megatrends is written here. Okay, and you can see 190 in 2018 here as well. No, 190 2018, perfect. Okay, let's go. So we will go back to 2013 in megatrends. Okay, it's here, and let's go 98 80 89 96 109. Again 109 104 157 202 155. And return on equity is going to be equity divided by total revenues. Okay, so we do it right now. We put equity divided by total revenues and put that in percentage as well, and put another one, another decimal. Okay, it's cool. Yeah, and then on the cash flow statement we just need capital expenditure. Capital expenditure you find here, but we will not use minus, we will just use normally. And in megatrends you can find capital expenditure here, net change in property, plant and equipment. And if you don't believe me, let's take a look. Here it's 4.7 and here is 4.94. It's kind of similar, but trust me, this is it. Okay, let's go back to 2013. And here, as I said, we will not use minus because it's going to be easier to calculate the ratios. 11, 7, 3, 2, 3. 2018 is 5, 10, 6, 34, 17. Okay. And now we will use that capital expenditure to calculate the ratio here. We have this divided by net income here. We will put that in percentage plus 1 decimal and do it like this. Okay, let's go. Now we have all the data that we need, and I will make this a bit bigger. And now if you want to see the data a bit easier, I suggest you that you make graphs, because here you have all the numbers, but it's always easier to see what you can do also with it's easier to see the actual, you know, visualization. Okay, so to create the graph, you go to here insert, and then you click those 2D columns for the numbers, which I'm in here, and for the percentage I suggest that you use 2D line. Okay, and as you can see, you have two options. You know, you can either choose what you want to analyze and then just click here and it will show you, or you can fill one graph by your own, and that's what I will also show you. You take another graph and you go here, chart design, select data, and now we go. Okay, add. Series name is going to be gross profit, and series value is going to be all that. Okay, and then here on horizontal you go edit and you use all those numbers. Perfect. Okay, but as I told you, it's easier, you know, to just go here, take everything, and then go to insert and then graph, and then you have percentage gross margin. And you can do that for everything because it's, as I said, it's easier to be careful here. Here we need to add also the years, yeah, because here it changed, you see. Okay, as I told you, we will do all the graphs, but you can usually use those that you want to analyze in more detail, you know. For me, what I would recommend you is to take total revenue, to take gross margin, operating income, net income margin, and then here may long-term debt, retained earnings, and then here you have capital expenditure anyway, you know. Maybe if you find it useful, you can also use private equity. Okay, okay, now we will do the following charts that are missing. We will use here the operating income, and we will use that data. Okay, and then the years. Okay, and then lastly we will use here net income margin. That's going to be here with the years of here. Perfect. Okay, let's quickly, okay, here long-term debt is basically 0, so we will not take a look at that, but we will take a look at here retained earnings. Okay, here I will avoid the years, you know, so just that it's faster, because at this point I think we all know what we are talking about. and the cash flow statement is useless. Okay, now we have all the graphs, and what we do now is just to decide if this is all okay, you know. Here we have total revenues, they are growing, so we can say, okay, yes, for example, we will fill this with green. Gross profit is also growing, so that's okay for the company. Gross profit on margin is very high, it's above 40%, which means that this is perfect. This is a no-brainer, let's go. Operating income is also growing, that's perfect. Net income is growing, that's perfect. Net income margin is slowly growing but falling at the same time. Yeah, this is no, we will not, this is not good, because preferably you would want to have it above 20%. And capital expenditure net income, it was first really high and then it fell, and right now it's a bit chaotic. We can also draw this just to easier explain and see with our own eyes. Now this is a bit disaster, so this is also a no-go. Okay, balance sheet, long-term debt, we don't have information. Retained earnings are growing, which is a good sign, and falling at the same time, which is not a good sign. And return on equity is falling, which is a terrible sign. Okay, so based on the information that we have here, just based on solely that information, I would buy this stock. I would buy this stock, but keep it as a short-term trade, which means no more than 1 year. Okay, because if they don't improve their financials, you know, for example, gross margins, net income margins, I mean, gross margin is fine, income margin, you know, capital expenditure against net income, if they don't increase that, that means that they are not investing that much into the business, you know. So if you don't invest that much into the business, then you have quite a problem on the long term, you know. However, what this company has really good is a magnificent dividend yield. 8.8%, it's amazing, it's above average. So if you want to buy this company, you will have it only for dividends, you know, you will not sell their shares or whatever on the long term. That's what I think. I hope I am wrong, because if I am wrong as well, then this is an amazing company and this is a no-brain buy company, you know. Okay, this is about your own investing, this is about your own research and everything. We have done that. So now you maybe have some questions. Yeah, what if I don't have the courage? What if I don't have the, you know, motivation to buy by my own? What if I'm a bit scared, you know, because I don't know how to do the decisions. I don't know if I will have good decisions or bad decisions, and so on and so on. Don't worry. In that case, I suggest you that you invest in mutual fund, which is like this. For example, you just write mutual funds. For example, if you're from Switzerland, okay? And then you go here and you can see, okay, UBS, sorry, is one bank from Switzerland which invests in your name, okay? Mutual funds are very similar to asset management. And you can also invest, you know, with asset managers. Basically what you do, you give them a portion of your money. For example, you give them, I don't know, 40 euros per month, and then they invest that money, and that's basically it. And you do that for 5 years, and at the end of the 5 years, maybe if you invested, I don't know, let's say 40 per month per 5 years, you invested 2,400. And then if you have at the end of the 5 years maybe 3,000, that means that you have how much profit? 25% in 5 years. That's okay, you know, that's not that bad. You know what I mean? You can just invest with asset managers, but if you don't want to give them money, then you go here to ticker terminal, you go here to track investing gurus, and then you have here all the investors, all the companies that are investing. You know, you can see that you have a lot of investment managements and so on, and you might recognize this one here, Berkshire Hathaway. This is Warren Buffett company. This is how he got rich, and those are all the investments that you have. The same thing is here. If you go to eToro, you have Warren Buffett Smart Portfolio, and you just invest. You know, you can see that most of the years it's profitable. They have 53 profitable weeks, so 53% profitable weeks. In 2 years you could earn easily 26%. From January up until now it grew by 20%, which is amazing. This is amazing growth. And if you don't have eToro, okay, if you have eToro, you just invest here, you know, invest more. You can see that on my demo account I invested a bit. But if you don't have eToro, here you have the whole portfolio, and you can just invest based on that. Yeah. Okay guys, I hope that this guide is useful for you. I hope that you learned something new, because that useless university didn't teach you that. And as I said, I will put all the templates, I will put all the links below so that you can do the analysis by your own. And then if you have any questions, let me know. Click subscribe, do the hard work, and see you on top of the world.